It is a great day, okay? SoFi actually did what no other fintech could seem to do, which was actually put out something positive in Q4 earnings. SoFi stock is actually sitting up around 18% in after hours right now on this amazing news. So let's just jump right into it and talk about the big numbers to start with. So first off, total revenue actually grew to $285.6 million, which was actually up from their own expectations for this quarter, which was actually $277 million. But whenever it comes to these really high growth fintech companies, I like to look more at the actual growth of what their business is doing in terms of their customers, their products, all these types of things, rather than if they're trying to actually make the money right now. So whenever we look at member growth, what we see is they actually got to 3.46 million users, which was actually up 87% year over year, or around 17.8% quarter over quarter. And then products, which is just whether one single member has multiple things like maybe a credit card, an invest account, maybe even a loan, that would be 3 products on one member. Well, total products actually grew to 5.2 million. This was actually up 105% year over year, or just around 21.2% quarter over quarter. And that insane growth comes because of massive cross buying. So this means, maybe a client originally signed up to do their investing account, and then SoFi sold them over into maybe a personal loan, for example. Well, cross buying actually hit an all-time record for them, actually tripling year over year. And then in terms of their technology platform side of the business, which is Galileo, and actually will include Technesis whenever that happens, that'll probably be in Q2, Q3. But for now, that's Galileo, and we actually saw 100 million users. This was up 67% year over year, or around 12.4% just quarter over quarter. Think about just how much growth that is, and yet people before were complaining about how much they actually bought this company for, and then how good it actually turned out. Now no one's regretting it, and I think we're gonna see a very similar path whenever Technesis actually comes into the business. But I just wanna break down those products just a little bit more. So what we saw was actually, the two different segments, the lending products and the financial services, which is more the money, investing side, that sort of thing. The lending products actually grew to 1.1 million users, or up around 18% year over year. Then, whenever we look at the actual financial services side, what we saw was around 4.1 million users, up 155% year over year, absolutely exploding. However, it is so important to understand that financial services side doesn't actually pay as well currently as much as the lending side. So it's really important that we try to cross-sell them over to those personal loans and home loans and all these sorts of things. But that doesn't mean that we're not making money on the financial side, and there's actually so many ways that we can actually increase how much we're making on the financial services side. And they've been doing a great job with that, with products like credit cards, for example, that practically take what is a financial services product, but actually applies more of a loan because there is an interest rate if it's not paid back in time. Or like a margin account. So for people that want to invest, but they want to invest maybe SoFi's money instead, well, then you'll need to pay between a 3 to 2.5% interest on that. So it actually becomes a lending product. Now, the margin accounts were not actually put out in Q4. This is a Q1 product. So we'll actually have to see, that quarter to see how that actually is affected, or especially into Q2, whenever we see a full quarter of those numbers. But in terms of credit cards, what we saw was around 6,000 users were using it last year, all the way up to 91,000 this year, which is like a 1,400% increase. And Anthony Noto said that this is the start for actually monetizing the financial services side, because we're actually just scratching the surface for the credit cards. I mean, he literally said we only have one card right now that's not even a premium card. So we could put out ones that might have annual fees for maybe a more high-end type of client, or ones that just offer different types of products that people might want to maybe cross-buy to. And then secondly, which is even more important than that, was that they actually talked about that options are coming. So we're actually going to get options for our products, which is a huge margin business for the financial services side. And I mean, there were so many other things that came from this earnings call that they had. And Anthony Noto, for example, we might have to do a separate video just on this earnings call. But Anthony Noto was talking about direct deposits and how since they've actually started up, the SoFi Bank and everything like this, and even though the number's really small in this quarter, they still said that they grew it by around 50%. And then even into Q1, they said they gave us a sneak peek that it also grew another 50%. So we're starting to get that ball rolling. And whenever we see a lot of direct deposits start to come in, the amount of spend starts to come in because that's their primary bank that they start to deal with. And then this is exactly where it gets tied into, cross-selling to things like credit cards and how we get them into the higher margin products whenever they actually start to spend their money. And that could include buy now, pay later, or a bunch of other products into the future for which they said that they're working on plenty of them in this new year. So going to be very, very excited to see what's going to come out into this future. Now, the outlook for Q1 of 2022 was unlike what we saw from the other fintechs. I mean, it wasn't great. We saw the same amount of revenue that what they're going to see from last quarter is what they're expecting into this quarter. That could change, obviously, but I mean, the quarter's already done, so I think they have a pretty good idea of where they're going to shoot for. And the outlook even said that it might even have been $30 to $35 million more if Biden hadn't extended the actual student loan relief. But doesn't that just go to show you just how undervalued SoFi is right now? Because the revenue, which is not going to move quarter to quarter into Q1 of 2022, and that EBITDA is going to stay around the same or maybe even drop a little bit lower, but even then, the stock still rised 18% on this news. That also has to do with the facts of last year they actually predicted that they would have 3 million customers by this point. They now have like 3.5 million. So they've done absolutely amazing. They've achieved all their goals by the third quarter. The fourth quarter was just all gravy on top. This is why I'm such a huge fan of SoFi. I'm so happy to be holding this stock and actually was able to buy as low as $9.30. It's obviously not my average. I think my average is somewhere along the lines of like $10.90. But still very, very excited to own this company, especially at these prices. I never thought I would get it this low. All of this is just perfect for why I think I'm going to actually just retire off this stock alone. I can't wait to see in the coming weeks how these short sellers are going to actually try to cover this 20% short on this company. Whenever we're starting to see great results like this, so proud of Anthony Noto and that team there, and I can't wait to see years in advance for what this company is going to do in 2025, 26, 27. I'm holding for the long term. But if you want to know what I mean by retirement by this stock by 2030, make sure you guys check out my video right here. It explains it all. But until then, make sure you guys like the video and subscribe down below if you want to see more financial content just like this.